So if you're a struggling SMC or ICT trader and you always wonder what liquidity areas will market reverse from and what liquidity areas will the market not reverse from, so this is the right video. Watch to the end. These are random highs and lows in the market, like areas like these highs and lows, all of them are liquidity areas, okay? But the thing is that some are time based, which are some are stronger. Like we have the, you see my indicators on here is yellow, here is blue, here is pink. So there are time based liquidity also. Like this is New York high, this is London high, this is Asian high. Now the summary of everything is that I see liquidities like POIs, and that's the easiest way you can understand. If you're watching this video, you probably know averages, you probably know order blocks. You know averages are found at areas like this or so. Example, you can see one here is a fair value gap. You can see one fair value gap right there. You can see another one here. Now these are POIs. That's just the same way liquidities are POIs too, and the same way other blocks and FVG gets mitigated, just like what you see right here. You see this OB right here that was mitigated. This demand, price returned back to it, and then you see price took off. That's a mitigation going on right there. Or you see how price mitigates this fair value gap. That's a mitigation you see right there. Now this is how the same way liquidities work, okay? But a liquidity is a bit different. So if this is a liquidity which is a high, when we say it's been mitigated, we use the word it's being raided. So if price raids this and retraces and reverses from there, is called purge and revert, and it's synonymous to how we call other blocks. That other block has been mitigated, okay? In liquidities, you can hear something like it has been raided, right? But the action whereby price goes above a liquidity pool and then reverses is called purge and revert. The purging is the raid, and the revert is the action that happens after. Now this is the only reason why people trade liquidities, because if price takes out a high or price takes out an equal high, because equal highs are also part of it, price takes out equal highs and start retracing back. Once it takes out that high, they want to look for sell positions, which is a reversal. The same thing if it takes out any high, they want to look for sell trades. Now this is the same thing when it takes out a low, they want to look for what? Buy trades. Now the whole idea of this video is that not all the time reversal happens from lows and highs. So first things first, just like how we have bullish order block, we have bearish order block, we have buy side liquidities, sell side liquidity. So buy side liquidities are the highs. All the random highs are called buy side liquidity, and all the random lows are called sell side liquidity. Okay, very simple. So what does sell side liquidity do? If price takes out the sell side liquidity, it reinforces bulls. Like it pushes price up for a reversal higher, and if price takes out a buy side liquidity, it pushes price lower. Okay, so how do you know what buy side liquidity price will reverse from and what sell side liquidity price will reverse from? Now that's the main intent of this video. So if the market is bullish, you find out that price is not immediately reversing after we take out highs. You understand that we're making higher highs and higher lows, and then you come and try to trade off areas like this and see price takes out that high, and you try to trade off areas like this. You find out that you lose because you don't know how far this high wants to go before it retraces. So even if it gives some kind of change of character confirmations on the lower time frame, the truth is you can't tell whether it's just going to do that and shoot back up. So the best thing to do is, since sell side liquidities reinforces bullish trades and buy side liquidities reinforces sell moves, then you have to only look for sell side liquidities in an uptrend. Okay, so when you're sure that the market is in a bullish program in a higher time frame in an uptrend, then you have to look for any sell side liquidity that is between dealing ranges. So now in this small diagram I drew here, we have this low and this high. These are dealing ranges. Okay, between this low and this high, every bullish PDRA is a potential area where price can jump from. Is it fair value gap? Is it OB? As long as you're in between this high and this low, they can push price higher, and any low found here that is also a sell side liquidity can push price higher. Now a vivid example of that is when we have something like this, and then something like this. Now in this complex structure, we have our dealing range to be here and here, because this is exactly the high that we broke. Okay, so this low pushed price all the way to take out this high, not this low. So therefore this low is just a mere liquidity because it's not the protected low. This is the one protected, and if price takes out this low, we have shifted bearish. Now I see a lot of people try to take buys after price runs this low. No, you're fighting the trend. This kind of low will not cause a reversal most times because it's shifting bearish. But these kind of lows, if we run this one and we leave this one intact and then we run this low, then there is a very high chance that when you get your lower time frame confirmations, just as you get your lower time frame confirmations for FVGs, there's a high chance that from here price will continue higher. So these are the sell side liquidity zones to look for, and then vice versa for buy side liquidity. So let's go into real life chart. Let me show you. All right, so take a look at this on a monthly time frame. This is GBP USD on the monthly time frame. What do you see? You see an active uptrend, high, low. Now all the way from here, this low took out this high, so we had that uptrend high there, and then price retracing, and we had this sell side liquidity. Now this is a POI, and this is where if price takes out this and give you lower time frame confirmations, you know that we are headed up. Okay, so GBP USD is very clear, and we are heading up to this level. And you see here is protected, is left. Now the areas that do not cause reversals are lows like this. When this price takes out this low on this particular time frame, monthly time frame, if it takes out this low, it means the monthly time frame has shifted bearish. Expecting buys from here is expecting price to just reverse. You can expect that, but it's wrong to like start putting your money there because you think it's going to flip bullish back. If you're going to be trading price taking out this low, is because you're trading towards an IRL and you believe that the IRL price is going to get to the IRL and continue, but you want to exit at that IRL in this price leg. Okay, that's it. So this is also the same for buy side liquidities, right? We have an active downtrend here. We have this low, we have this high all the way back here. So we created a breaker structure here, and then now we retraced, we created this high. Now this high failed to push price to take out this low, so it means this is not a protected high and it's a buy side liquidity, and the price can take it out and take out this low. That's the meaning. So we stopped here, and then price took out this high, which is a buy side liquidity, and then you see we dropped. Okay, and this was the low that price aimed for. Now from this buy side liquidity, you can trade it. When price takes out a high like this, you can go to the lower time frame. Like this is the weekly I'm looking at. So if you want to do this thing, so you can look for a change of character on the 4-hour time frame. If you found your liquidity on the daily, you can look for your change of character on the 1-hour time frame, right? And then if your buy side liquidity that was found on something like the 4 hours, you can look for your change of character on the 5 or 15 minutes. Okay, that's just how it works. Okay, so buy side attacked and then price came down here. Now where are those buy sides that you shouldn't take seriously? Are things like this. Now in as much as this high is a strong high, it led to the taking out of this place. Anytime price tries to take out a high like this, it's not liquidity to continue lower. It has changed bullish, as you can see how price changed bullish after that, because here is a strong high. It's protected. It's strong because it pushed price to take out a low. That's it, and that's why it's very, very strong. So learn that. See you guys in the next video. Make sure you subscribe.